Ready to go, Sanj.
Awesome. What is going on, guys and girls? Can I just get a quick audio and visual check? If you're in the Discord, please let me know if you can hear and see me all good. Awesome. Thank you guys so much. Much appreciated. Okay, welcome back to another week of what I like to call Mind Over Markets. These are kind of my introductory sessions, shall we say, to improving your trading psychology. If you've been with us following this series since the very, very beginning, this is session number 4. And what we like to do on these sessions is we spend very, very little time, I would say arguably no time, especially in these first few sessions, very little time actually on the charts themselves. These sessions are all about improving your mindset, improving your psychology, and what I like to think is an underrated skill in the market, which is really better getting to understand yourself as a person, yourself as a trader, yourself as an aspiring risk manager, because I think that's the greatest context of what we could probably give to what we're all working towards here. Now, this is the 4th and final introductory segment. Following on, every session after this is really going to be tailored to around the topics, the conversations, the ideas, the challenges and the hurdles that many of you are experiencing. So if you guys do have specific topics, specific things that you're struggling with, things that are really impacting your performance in the markets, now is the time following on from this session where I really want to hear about them. Because what we're going to be doing, and if you haven't already, I would highly recommend going back and watching the last 3 sessions through. But the last 3 sessions in culmination with this one specifically, we're going to be laying a foundation, which we're going to be building on every single week to help you to overcome your challenges and your problems in the grand scheme of things. I'm a big, big believer that creating success in the markets has to start internally before you see any results externally. And I'm a true believer of that because of a framework that I've shared over the last few weeks. And I'm a big believer in how it works and how it has an impact in every single one of our, and I'm not just going to say trading careers, but life in general. And it's this idea that everything in life starts with a belief. Beliefs determines what you think. Thoughts influence your emotions. Emotions tend to change how you act. The actions that you repeat become habits, and habits are ultimately part of your identity. And so if you're here, if you're tuned into a call like this, and you have the aspiration to become either a consistently profitable trader, or you're someone that is already consistently profitable but want to take it to the next level, for me, it's about embodying a new identity. That identity is supported with habits and actions. Those actions are the byproduct of your emotions and your thoughts, and those all stem from your belief system. And that is why every week over the last 2-3 months, I think it's gone on now, we've been covering, or I should say every one of these sessions that we've been doing, we've been covering a different aspect of that framework to, again, better help you to understand yourself, to most importantly, drive you to better perform in the markets. Now, I mentioned, I think between last week and probably this week, these are arguably, I would say, 2 of the most important sessions when it comes to laying the foundations of what you need to become consistently profitable in the long run, at least from a psychological perspective, right? One of the things, and something that we haven't touched on at all, it's actually the thing that I spend least time on, because I wouldn't say it's necessarily my area of expertise, but actually finding and developing your edge. And a big part of that is going to be helped with the platforms that are provided, the data and the metrics that are supported inside the Darwinex platform, which help you to figure out what is your edge in the market and how you can optimize that in the long run. When it comes to finding your edge psychologically, many of the metrics, the data that's provided inside of the platform can go a long way to actually fix many of the psychological problems that you have. And that's something that we're going to be expanding on today. Before we jump into the context of today, I want to do a very, very brief recap as to what we discussed on the last session, because as I mentioned, these are all building one on top of each other. Now, last week, we actually talked about the idea of raising your awareness. We talked about the importance of self-awareness and how this has an impact on how you perform in the markets. And a few things that we specifically focused on was the idea of journaling and mindfulness, and the power that both of these can actually have together. The common thing that I share with most people is I've been very, very fortunate, especially over the last 5 years, to connect with and work with many, many traders. I've spent a lot of time talking to retail traders that are either struggling, finding those breakthroughs, or have actually found their path to consistency. Now, one of the things that I tend to see is that all successful traders seem to have common traits. They seem to have ways of thinking, ways of approaching the markets that all seems to leave clues as to why they are successful. Now, one of the things that I find every successful trader takes very, very seriously is the importance of data. They understand that the human mind in its raw nature is actually quite flawed, at least when it comes to our memory. So the analogy that I share with most people, and something that I've probably shared with you guys on a previous call, is this idea of asking you to think back what you had for lunch yesterday. Thinking back about that, most people could probably remember, right? Most people could probably think about exactly what they had. If I asked you to think about what you had last week or last month or 3 months or 6 months ago at this very day, on that specific week or month, could you remember what you had? The chances are your memory doesn't go back that far, because your conscious mind has a specific cap, a specific limitation when it comes to how much you can actually remember going forward over time. And this is where I find that consistently profitable traders, ones that truly have both a strategic and a psychological edge, take this practice very, very seriously, which is keeping a good journal. They understand that if you really want to improve in the long run, if you really want to maximize your performance, you can't really rely on your memory to figure out what you were thinking, what you were feeling, and how you acted in a specific moment. Because the reality is, your memory can be a very, very subjective place. I could say certain things, or I could do certain things that could completely tweak how you recall certain events. And so your memory is not something that you should necessarily rely on, especially when it comes to making important decisions about how you manage your money in an industry which is completely based on probability. So every single one of you needs to be keeping a journal. And this is not just a journal that records what trades you've taken and the outcomes of those trades. But I would always encourage that most people, especially if you're having some psychological battles and there are things that you're trying to overcome, I would always encourage keeping a journal that documents your thoughts and feelings alongside the actions that you are taking. Because the reality is, and again, we take this back to the framework that we're working within, if you truly want to change your actions, you need to be able to understand what the thoughts were and the emotions were that were driving those actions. When you can start to uncover the triggers behind the actions that you've taken, you will start to figure out how to break free of certain patterns of behavior. And that's something that you really, really want to keep in mind and take on board. I just want to check. There's a quick message in the Discord chat saying they're having issues with sound. Is anybody else having issues with my sound? Is it cutting in and out at all? I just want to make sure there's no issues. If you're in the Discord, please let me know if you're having any problems. Sound seems fine to me. Okay, guys, if you're having any problems, please let me know. Otherwise, for the specific user that was having the issue, maybe try and disconnect and reconnect and see if it's any better for you. I presume maybe just a connection issue, maybe on your side. Okay, so we were talking about the advantageous benefits of journaling, right? Every successful trader is going to be keeping one because they understand the importance of recording your data, reflecting on it over time, and then actually using that as a foundation once you've got a good sample size of trades and time to actually be able to make data-driven, process-orientated decisions about how to actually improve your edge. Now, from a strategic perspective, I presume that makes sense to a lot of people. The more data you have around how your specific approach works and maybe doesn't work in certain situations in the market is going to help you to make calculated decisions about how to optimize and refine your edge in the long run. When it comes to your psychology, recording the thoughts and the emotions behind the actions is very, very powerful. because you will start to be able to connect the dots in hindsight and start to recognize that this event, this situation, this outcome, this thought, this feeling triggered me to feel something, which triggered me to act in a certain way. And so again, what most people start to do wrong is they try and change their actions through motivation, through willpower, through discipline. And these are all fantastic things. The problem is they're all based around this idea of feeling. They're based around the idea of inner emotion. And if my study into psychology has taught me anything, it's this idea that emotions are very fickle. How you feel today is going to be different from tomorrow. And so if you truly want to have consistency in your approach, you need to base this on something that's deeper than just emotions. And this is where I think being able to connect the dots, having a refined process, actually having a suitable sample size of data, of time, of market conditions is really going to show you that these are the patterns in terms of your thoughts. This is what leads to emotions, and this is what ultimately leads to certain actions. When you have that collection of data, actually breaking free of those patterns becomes significantly easier because you're able to discover things before they become a real issue, right? Most people try and tackle something like overtrading once they have the urge to overtrade. They don't actually recognize that overtrading in one of its most common forms is actually a result of boredom that they've experienced over the last 2 days when they've had no setup in the market, but they haven't actually addressed that from a psychological standpoint. When you don't address boredom, your mind tries to create some excitement. And when you don't have a plan for how to react in that situation, the place where you try and create that excitement is usually inside of the markets. And I think you guys will know exactly what happens when that seems to be the case. So this is why journaling is very, very important, not just from a strategic perspective, but also from a psychological perspective. And it's a massive foundation that you need in terms of raising your level of self-awareness. Now, having that data is fantastic, but it's only as good as your ability, it's only as good as your ability to actually be able to recognize and break those patterns in the moment themselves. You see, what your journal will do is provide you with a blueprint that helps you identify when are your bad habits most likely to occur. But your job in the moment is to be mindful and present enough to recognize that you're experiencing tilt, you're experiencing frustration, you're experiencing anger or boredom. All of these things are really, really important thoughts and emotions to be aware of, because again, if you leave them unchecked for long enough, you will start to find that they impact your performance in the markets. Now, one of the analogies that I share, and I share very, very often, is that having been in a fortunate place to have been working with traders almost exclusively for the last 5 years, one of the things I am still yet to witness is a trader who wakes up in the morning and decides, you know what, screw it. Today, I want to do some damage to my account. I really want to blow a huge chunk of money. I really want to fail this challenge. I really want to put myself into this irreparable amount of drawdown on my Darwinex account. It doesn't happen. We are all here, and I presume you're only listening to a call like this if you have the best of intentions for yourself, if you want to see yourself succeed in the long run. And so the reality is, if you are ever making those mistakes, if you're making those big detrimental mistakes or issues that cause such a big consequence that it's so hard to come back from, the only true reality is that you're truly not present at the time to understand the long-term consequences of what you're about to experience. And so this is why I say that journaling combined with an ability to be present is kind of the secret sauce when it comes to your psychology to be able to break free of any bad habit that you have. The moment you're able to dissect and look beneath the surface to uncover the belief system, you combine that with a little bit of journaling, a little bit of a practice of mindfulness, and you can start to be really on your way to breaking past some of these habits and cycles of behavior which seem to hold so many traders back. Now, the last thing that we talked about off the back of last week's session is, again, it was a little bit of an exercise tailored around the idea of raising your awareness. And it was to get you to focus on specifically 2 things. The first one was uncovering your why. This is an exercise that I work with a lot of traders on to help them to understand why they're actually trading. Why are you getting into an industry where the failure rate is arguably 95% or more, and trying to become successful. You're arguably going into one of the hardest industries or jobs, if you would look at it that way, that ever really exists, right? There are very few industries that correlate with how difficult trading can be, because arguably it's closely linked to this idea that we are trying to thrive in a probabilistic environment. And most human beings, at least in the way that we are brought up, and this is something that we're going to expand on today, we are in a position where we're not really wired to thrive in that sort of environment. Most of us have a mindset, we have a belief system that relies on certainty. And if you think about it, the majority of the problems that you have in the market are usually a result of that. We're looking for certainty when really we should be accepting that this is a game of probability. And this is why our fourth and final session, as we're moving into today, is all about this idea of accepting uncertainty. How do we actually get to that point where we create that mindset shift? We accept that the markets are and will always be uncertain. And how do we actually thrive in that environment? Because in my experience, and I don't say this ignorantly because I know it was my biggest problem for many, many years as an aspiring trader, one of the biggest things that crippled my performance was looking for certainty. I was looking for this idea that if I did the right things, I should be rewarded. If I followed my plan, I should make money. And I didn't quite understand at that point in time that that wasn't a me problem. That's a human problem, right? And maybe I use the word problem quite loosely there, but problem in the sense that it becomes an issue when you bring that belief system into a probabilistic environment where nothing is ever guaranteed. Now, from a fundamental perspective, accepting uncertainty is probably one of the shifts in your belief system that I think will have some of the greatest performance-enhancing impacts for your trading in the long run. The problem is, it's arguably one of the most difficult shifts to make because it goes against, as I've mentioned, so much of our natural programming, our wiring that we've been basically brought up to believe our entire lives. Now, when you're running a piece of software that has been so familiar and used to running, it's quite hard to upgrade, right? We know this with the modern day smartphone, right? If you run a piece of software on a piece of hardware that is quite old, quite dated, quite used to functioning a certain type of way, the moment you upgrade it to a newer, brand new piece of software, there's resistance, there's friction. And unless you change your phone, upgrade to a newer piece of hardware that's more capable of running that software, it's hard to really see the full benefits of it. Now, we as human beings, we do the exact same thing. We bring a belief system fueled from experiences, lessons, things that we have observed from a much younger age, and we bring that with us into the market. Now, because it has sat with us for so long, often the hardwire in terms of us, in terms of our mind, in terms of the comfortability that we have with the beliefs that we hold and we believe are true, those tend to hold us back. In order for you to really make a change in terms of your performance in the markets, the first thing you need when it comes to accepting this idea of uncertainty is you firstly just have to open your mind. You have to open your mind to understanding that you are running a piece of software that is not really going to allow you to thrive in the markets. Now, this is not really going to be the case for absolutely everyone. I'm not going to say this is a hard rule for every human being, but for 70, 80, 90% plus people, I would say this is going to be the case. And the statistics reflect this, because the reality is if trading was as simple as drawing lines and boxes on a chart, everyone would be millionaires. Nobody would attend these calls because you would all be able to execute absolutely perfectly and accept any outcomes that the market presents. The reality is trading is far more a game of psychology than it is learning to draw lines, trend lines, boxes, and understanding indicators. I'm not diminishing those by any means. You need a strategy and you need an edge in the market, and that is your raw foundation. But if you don't have the psychology to actually be able to apply it, it becomes absolutely useless, right? If the edge does not work for you as a person, then it does not work at all. And this is why this game is not about copying somebody else's approach. It is about truly understanding yourself and what actually works best for you consistently over a large sample size of time and trades. Okay, so let's actually unpack this a little bit. Let's talk about what is uncertainty. I want to start at the very high level, top level overview. What do I mean by uncertainty? Now, when I say that word to most people, a lot of people immediately reject it. Whether it's from a conscious or a subconscious standpoint, a lot of people immediately reject the idea because they believe that if I tell them that the markets are uncertain or unpredictable, they believe that means nothing works. Actually, it's not what I'm referring to at all. When I say the markets are uncertain, I don't mean to say nothing works. What I actually mean is everything works. Everything works. It just doesn't work all the time, right? And that's the mindset shift that I firstly want you guys to make. Accepting uncertainty does not mean nothing works. It means everything works, but it just doesn't work all the time. And whether you acknowledge that from a conscious or a subconscious standpoint, I think everyone will agree with that sentiment when you really start to break it down. I could pull up a chart of any market in the world. You could name it. We could talk all the way from euro dollar, the S&P 500. I could pull up a futures chart of orange juice. I don't know, wherever you want. It does not matter. I could find on that chart an example of where support and resistance has worked. I can also find an example where it has failed. I could find an example of where supply and demand has worked. I could find an example of where it failed. I could find an example of where order blocks or fair value gaps or indicators or MACD, you could name absolutely any way to analyze the market, and I could find a time where it worked and where it failed. I could even pull up the cycles of the moon and correlate them to certain times in the market, and I can show you how the moon perfectly predicts the next move in the market, and I can also show you times where it fails. The idea and what I'm trying to explain here is that everything works. The key to finding your edge is accepting that it just does not work all the time. And the moment you truly accept that, you set yourself free. You set yourself free because there is no longer this expectation to try and find certainty where it does not exist. And that is the fundamental problem that most human beings bring with them into the market. They are looking for certainty. They are looking to understand that if this, and this happens, this should be the outcome. How many people observed the idea of the talk and the conversations that when the potential war broke out over the weekend from what happened with the United States, how many people were expecting a significantly different reaction to oil or to gold, for example, right? How many people? I saw so many people talking about the idea the moment that the attacks were announced that gold is going to open up on Sunday evening and it's going to be, sorry, not gold, oil is going to open up Sunday evening and it's going to be $100 plus. That was all over my timeline. And again, not saying it wasn't going to be the case, but I'm saying as a trader, you have to be flexible to the idea that the markets are uncertain. Absolutely anything can happen at any time because the markets don't move based on a direct formula of X, Y, and Z. They move based on people. They move based on the psychology of the people that actually have the money to drive the markets, right? And that's something that not a lot of us stop to actually think about. So the whole idea and the whole shift that I want you guys to begin to make from the very, very beginning is understanding that it does not matter how much knowledge you have. It doesn't matter if you have insider connections to every government and economy around the world. It doesn't matter if you're the best analyst in the world. It doesn't matter if you have, I don't know, ICT on speed dial. The markets are always going to be uncertain. That is the raw reality of what we are working with. Everything works. It just does not work all the time. Okay. I want to go through a few symptoms that I see a lot of traders experience, which are common signs that you maybe have not accepted that the markets are truly uncertain. You haven't accepted that everything works. It doesn't work all the time. And you haven't accepted this idea that absolutely anything could happen at any time. And I think this weekend is a prime example of that, right? Some of the most common symptoms that a lot of traders experience: changing their strategies. This was my crux. 6 years I spent hopping every few months from one strategy to another, to then cycling back to where I started, to then hopping from another to another. And it's not because the strategy was broken, because as we've already established, every strategy works. The problem was I didn't accept that it wasn't going to work all of the time. And that's a fundamental problem. Have you ever been in a position where you've moved your stop loss? The market isn't really doing what you're expecting, but you have convinced yourself that your stop is just too tight. I'm just going to extend it a little bit. And that's going to give me the breathing room to allow this position and my idea to actually play out. What are you doing in that situation? You're saying that you know more than the market. You know something that the market doesn't. And by moving your stop loss, you're not accepting that anything can happen at any time. Have you ever been frustrated after a losing trade? Now, there can be many reasons behind that, but one of the big ones is often because you haven't accepted that anything can happen at any time. If you haven't gone into a position accepting that you could be wrong, are you really accepting that this is a game of probability? Are you really accepting that this is a game of essentially uncertainty each and every day? Have you ever taken a loss or something has happened, you've been slipped on a position and you blame somebody else? You blame the markets, you blame Trump, you blame your broker, you blame your prop firm. How many of you have been in that position? And again, it's never the external factor. It's the fact that you're not willing to take responsibility and accountability for the fact that you haven't accepted that anything can happen at any time. Because if you truly believe that, you would manage risk. You would respect risk to a degree where you accept that it just takes one event to really wipe you out. And this is the downside of the traditional modern day prop firms. They've got everyone so accustomed to this reset. And this is one of the big reasons why I like what is going on here at Darwinex, right? What we are building here in this ecosystem is closer to what you would experience when managing real capital, whether it's your own or whether it's investor capital, right? It is probably the closest experience that you could get that replicates what that situation is really like. And it doesn't give you this reset button that you get with most modern day prop firms. Most modern day prop firms don't equip you for the skill that every trader needs to succeed. And that is accepting the markets are uncertain. And as a result of that, at some point in time, you will experience a period of drawdown and how to actually recover from that. Because for me, that's the truest sign of a successful trader. It's not making successful trades. It's not getting paid out. It's not getting capital allocation. It's what happens when nothing goes to plan. It's what happens when you go into a deep period of drawdown, or maybe I shouldn't say deep, but a period of drawdown. How do you cope with that situation strategically and psychologically? Are you able to work yourself back out of that? All of these things are the things that really matter because they are absolutely inevitable because the markets are always uncertain, right? Last couple of symptoms I had noted down. If you've ever been the type of person that's looking for a perfect opportunity, how is it possible to find perfection in an industry where it is fueled by uncertainty, unpredictability, never really knowing what's going to happen next? The reality is perfection does not exist. And the last one you kind of couple up with this is seeking assurance in your analysis, finding other people that are doing the same thing that you're doing, not acknowledging that most traders are losing money and you'd probably be better off fading most people, right? So a culmination of kind of all of these things. It's not to say that every single one of you is going to experience all of these, but I can guarantee, especially if you're on a type of call like this, you've experienced at least one or more of these problems at one point in time. I know for sure I've been guilty of it. And again, we're human beings. It's going to happen, right? It doesn't make you any less of a person by experiencing these. It makes you a human being, okay? Now, why is it so hard to accept uncertainty? Why does it disagree with, at least from a psychological perspective, with the wiring of most human beings? Well, there are a few reasons behind this, and I think it's helpful to understand them because understanding the nature of the problem can put you on a more direct path to actually solving the issue. The first one is your mind is generally wired to find patterns in everything that you do. This is how we form habits of behavior, because our mind recognizes that the most efficient course of action to achieve this objective is by doing things in a certain way, right? It wouldn't make sense for me to try and learn how to use a light switch every time I had to do it. I'm not going to flick the switch one time and then try and throw a bottle at it another time and then try and poke it or tap it in different ways. It doesn't make sense. Your mind understands that is the most efficient way to make something happen. And therefore, it makes that action repetitive. It becomes a habit over time, and it makes it a very, very efficient way to operate. It doesn't require mental capacity. I can turn a light switch on and on without giving it some conscious effort. And that's what makes your mind efficient. It doesn't have to use some of its limited conscious ability for a task which can pretty much almost be automated. We experience this in many other areas of life. You don't brush your, I can presume most people don't brush their teeth differently every time they do it. I presume you all have a set routine in terms of how you brush your teeth, because it's a pattern, it's a routine, it's something that your mind has identified as an efficient way to achieve the objective. You do the same with your shoelaces. I presume you tie your shoelace the right way or the same way every single time. Various different ways to do it. You will do it in the way that your mind has recognized as the most efficient way, creates a pattern out of it, and it has been instilled as a habit. So your mind fundamentally is wired to identify these patterns because it understands things repeat. It understands that its primary objective, something that we talked about in one of our first sessions, the primary objective is the mind is to keep you safe. It's to help you to survive. And part of that is making sure that you stay clear of danger. You can use your mental capacity for the things where it really matters. You don't really need to be conscious when you're doing a lot of things that can just be automated, that your mind has assurance that it's not really going to cause you a threat the majority of the times that you do it. Now, how does this become an issue in our trading? Well, if your mind is psychologically wired to find patterns in everything that we do, this actually makes technical analysis a little bit of a problem for most people psychologically. You see, most traders in this day and age, they make the majority of their decisions based on technical analysis. And I'm not saying there's anything wrong with that. I have been, again, fortunate enough to meet many traders that only focus on a technical approach, and they've done very, very well for themselves. The problem is technical analysis can kind of give you this false reality that you know what's going to happen next. It gives you this false reality that you can predict the next move in the market to a high degree of certainty. And one of the biggest issues and reasons that we fall into that trap is because there is an infinite number of ways that we can analyze a market. You have a plan, you follow that plan, you execute, and you lose money. And the most obvious thing that your mind wants to do, because your mind is trying to alleviate pain, is it gets you to analyze that loss. And then you realize, well, actually, if I drew a line here instead of here, or if I put this trend line, or if I added this indicator, that would have told me that this trade wasn't going to work. And what that leads to is a very, very inconsistent approach, because then you're constantly refining something which is never broken. It's actually working completely as intended in its probabilistic nature. The problem is your mind is looking for certainty. And in an uncertain environment, you are never going to find that. So I'm not saying that using technical analysis is a bad thing and none of you should rely on it. What I'm saying is you have to acknowledge that there will always be randomness in ones, and you will only ever find probability in hundreds or thousands, depending on the length at which you want to take your data collection to over time, right? I would always say the larger, the bigger the sample size, the better. But you have to understand from the outcome of one specific trade, there's nothing to learn. There are ideas, there are theories, there are concepts that you can take away, and you can apply those over a large sample size to see if they stack probability in your favor better. But is there anything that you can draw a conclusion from to say this is fundamentally broken? It doesn't really work that way. It would be no different to me taking a perfectly balanced coin that has heads on one side and tails on another, flipping the coin, calling heads, it landing on tails, and then me throwing the coin away because I presume it was broken because it didn't give me what I wanted. It's not how it works. We accept that idea with the coin, but because of all these ways that we can analyze the market and justify as to why something happened, the mind starts to connect the dots, identify those patterns, and it makes you believe that there is always a reason behind a loss. The reality is sometimes a loss is just a loss. Sometimes probability, market conditions, unexpected situations, they're just not going to be in your favor. But you'll never know that if you don't really have the right foundation from the very beginning. And that's something that we're going to talk about very, very shortly, right? But just firstly, acknowledge that idea. If you rely solely on technical analysis, you're more likely to fall into this trap because there are an infinite number of ways in which you can analyze the market. Okay. Secondly, and kind of closely tied to what we've been discussing here, we naturally have a fear of the unknown. Most of us, again, from a psychological perspective, are more comfortable staying within our area of comfort, the comfort zone, right? Most of us are most familiar with this area, and it's easier to do the things that you are familiar with instead of step into a situation where you don't really know what's going to happen next. It's the exact reason why when you do something different, let's say you are, I don't know, stranded on a jungle, right? Your plane had gone down, you managed to survive, you're stranded in a jungle, you're completely alone, you have no idea what's around you. It's very, very likely that you're going to be experiencing a heightened level of stress and you're going to feel anxious. That is your mind telling you that you are outside of your comfort zone. And those things that you're experiencing are designed to help you. They're designed to help you to make more impulsive and reactive decisions to help you to survive in that sort of environment, right? But again, from this perspective, we make the mistake of bringing this mindset with us into trading. We are operating in an environment where we never really know what's going to happen next. And from our instinctual standpoint, we fear that. We fear what we don't know. And so we're always looking for ways to overanalyze, overthink, seek perfection, seek assurance in our analysis because we're trying to find certainty behind the move that we're going to take. The reality is nobody will ever know with 100% certainty what's going to happen next. Because if you did, you wouldn't be on this call. You wouldn't be tuning in to a call like this because you'd have 100% win rate and you'd be the richest person in the world, right? The reality is we don't really know what's going to happen next. And we are always fighting our mind's instinct to seek comfort, to seek assurance. This is why, and one of the most common reasons why, for example, you can put on a trade, but sometimes it's so hard to walk away and just let the market do its thing. What happens to most people is we just want to sit and stare at the trade and watch it play out and watch it move tick by tick, even though you're trading a 5-minute, 15-minute, hourly, daily chart. There's nothing to do in between, but your mind just wants to sit and observe because it gives you a sense of comfort that if something was to happen, I could react in this moment. Okay. The last one, and this is actually a big one, and again, goes back to this idea of how most human beings are wired. We are generally taught that a certain input has a certain output, right? Something that we've touched on in one of our previous sessions. We talked about this idea that we are taught that karma is a very real thing. If you're a good person, good things will happen to you, right? We're taught that very linear connection between good things in, good things out. We are taught that if you exercise, if you follow this plan, if you do these specific workout routines, if you follow this diet to a T, you will get fit. Linear thinking in, linear outcomes coming out of that equation, right? We are taught that if you work hard, if you dedicate yourself, if you sacrifice, you will be rewarded. I have met many traders. Hell, I was one of these traders that dedicated years to this game and made absolutely zero progress. Not because I wasn't putting in the time and energy, but for me in my situation, I wasn't necessarily working on the right things for the problems that I was experiencing. But again, I had this flawed mindset. I believe that I'm working hard. I believe that I'm dedicating my time, and therefore I should be rewarded at some point in time. The school system has taught us that, right? We are taught that if you dedicate X amount of time to learning or getting a degree in X, Y, and Z, and you do well on this exam, you will be able to be qualified and practice in this industry. The reality of what we tend to experience doesn't always match that, especially in a probabilistic environment. Trading is infinitely hard because you can show up, you could do absolutely everything perfectly. You can analyze perfectly, you can execute perfectly, you can manage and exit your position with the exact precision to your trading strategy, and you could still lose money. Hell, you could execute absolutely perfectly and get stopped out in record time because anything can happen at any time. And that screws with your psychology. And to make it even worse, you can also show up, you can do everything wrong. You can treat this game like a casino, and you can essentially just gamble your way through the day. And guess what? You could actually make money. Now, when you're in a position where psychologically you are putting emphasis on the outcome of my day, have I made or lost money today? If that's your idea of a successful day, you will never find consistency, because the market does not work in that linear way. The market does not work where just because you've made money doesn't mean you've done the right thing, right? You have to accept that sometimes you're going to do everything right and you're going to lose money, and sometimes you could do everything wrong and you have to make money. And this is why there is this general narrative that if you are an aspiring successful trader, the only way to find consistency is you have to focus on your process, the things that you can control. If you're only measuring your progress based on P&L, you're always going to be inconsistent, because there are going to be days where you chase it. There are going to be days where you do everything wrong. And on those days, if you don't recognize that you've done the wrong thing, it will lead to bad habits. It will lead to spirals. It will lead to patterns of behavior which are not going to pay you in the long run. And all of this sources back to the idea that most of us struggle to accept the idea of uncertainty, because we are taught that if we do the right things, we will be rewarded. We connect the idea of the reward with doing something right. And in an industry where you could pretty much be rewarded almost blindly, you don't have to do anything, but you have an opportunity to make money. It's very easy to trick yourself into believing that you've done the right thing when really all you've done is cemented a bad habit. Okay. And again, I would like to think that everybody tuning into this now, whether it's live, whether you're on the recording, understands that from a psychological perspective, right? You truly understand and accept that this game is not necessarily about hard work. And that's the thing that's going to bring you success. Hard work is, of course, important, but you have to be doing it in a specific area where you are struggling. If it's psychology, it should be there. If you have no edge, it should be there, right? But you have to be able to identify what that is and realize what's going to put you on the path to consistency. Okay, so those are I would say the three big areas as in terms of our psychology as to why we reject this idea of uncertainty. Our mind is wired to find patterns where they don't exist. We generally have a fear of the unknown, and therefore every trade outcome being unknown doesn't really sit well with us. And the last one is we're taught that a fixed input leads to a fixed output. And this is one industry where that dynamic does not really exist. Okay, so we've spent a lot of time today, almost the first 30, 45 minutes of today's session, talking about this idea of why accepting uncertainty is so important and why most human beings suck at actually being able to adopt that line of thinking, to adopt that belief system. Now, that's good and well. How do we actually fix the problem, right? How do we actually get past the point where we can actually accept that the markets are uncertain and we can focus on probability rather than certainty in each trade that we take? Okay, I want to give you a few of my best tips that I stumbled across, and again, completely by accident when it came across for me, but things that I have seen in many successful traders, I've taken on board and adopted myself during my own period of personal development as a trader. And I've seen work very, very successfully in the clients that I work with one-to-one, right? The first one is I'm a big advocate and believer in the idea that you can't be what you can't see, right? You can't be what you can't see. I'm a big believer that for you to really believe something, it makes sense that you need some kind of experience or exposure at seeing something play out over time. If I told you guys today, pigs can fly, I would like to presume that most people are not going to believe me. But if you got off this call and you looked out your window and you saw a pig fly through the sky, you might doubt yourself. You might question as to whether what you saw was actually real. But then if you saw it again tomorrow and the day after and the day after and the day after, at some point in time, your belief system would change because you've had exposure. You've had some kind of experience that has shifted what you thought to now what is actually your reality. Now, creating this expectation of uncertainty works the exact same way in the markets. If you truly want to understand that the markets are uncertain, what you need to see is that play out time and time again. Now, the best way to do that, and something that we touched on right at the very, very beginning, is actually having ample data to prove that to be the case. The problem is, this is something that most traders lack. Most traders don't focus on the idea of gathering data to support their edge. Most traders don't actually take that data and then back test it or demo trade it in an environment to show that this data on paper actually works this way in reality. You see, the thing is, if you were to truly understand and analyze your edge over time, you wouldn't just be looking for the times where your analysis was right. You would actually be looking for the times where you lost money. You would be looking for the periods where you went through a period of drawdown. You would actually be specifically focusing on the periods of the time where your strategy does not work. What market conditions put your strategy in an environment where it doesn't really thrive and you kind of just have to survive, right? If you started looking at your win rate over the next 100, 500, 1,000 expected trades, these are the things that gets you to start accepting uncertainty. But the reality is most traders don't have a suitable sample size of time and trades to prove that this idea really works. I was having a conversation with a trader literally Friday, right? So just about 3 days ago. And he was talking about this idea that he had this fear every time he put a trade on that he wasn't sure if it was going to win or lose. And this fear built him up to impact his performance in a variety of ways. But he had this fundamental idea that I'm not sure this trade is going to make money. And so the question that I asked him was, how do you know you have an edge? And he was like, well, you know, I've taken this strategy from here and I've started to apply it. Okay, how much testing have you actually done for that strategy? Forget where you got it from. Forget the source that you got it from. I would trust that maybe they have done their background and developed that foundation to trust the strategy. But do you actually trust it to work over time? And he said, well, you know, I've done some back testing. Great. How much back testing have you done? Well, you know, I've tested it over the last 20 trades. And over the last 20 trades, it's got a 60% win rate. I'm hoping from everything that we've been discussing today, you guys are starting to see the problem here. 20 trades basically shows you nothing, right? I'm not sure what time frame this trader was looking at, but whether that was 20 trades over the space of a month, whether it was over the space of a year, either way, the sample size is far too small to be able to draw any meaningful conclusions. The reality is, had he expanded his sample size, his win rate may change and it may be different than he is expecting. But the more data you have, the more it creates the right expectations of what should happen when you go live. And that actually brings your mind a certain degree of comfort. It brings it a certain degree of security because it's no longer guessing. There's no longer an unknown. When you have ample data because you have taken the time to analyze your edge, you can stop and say, right, over the last 1,000 iterations of this, and this criteria lining up and me taking this position as a result of that criteria, 42% of the time, this trade works out. But then now you can go into this acknowledging that actually with any given time that this criteria plays out and I decide to click the button, there is a 58% chance that I'm probably going to lose money on this trade. When that is your belief system and that is your expectation, does it ever make sense to full port your account? If you've got a win rate of less than 50%, and by the way, it's possible to be profitable with a win rate of less than 50%, but if you have a win rate of less than 50%, does it ever make sense to have a very high degree of risk, knowing that you are more likely to lose than win on maybe your next given position? It doesn't. Again, it goes on to create the right expectations. The right expectations from what your data are providing create the right expectations of how you're going to think, feel, and react going forward, right? A little while ago, I had a discussion with a trader, which actually made for a very interesting conversation that I now use as almost like a case study going forward at helping people understand the importance of understanding what having ample data really gives you as part of your psychological makeup, right? Ample data gives you the exposure that you need to align your expectations to actually be able to have a chance of thriving in a probabilistic environment. Another good example of where not having that understanding of your data will work against you. I had a discussion with a trader that claimed they had a strategy with a 50% win rate. And they said their problem that they came to me with was, after I go through 2 or 3 losses in a row, I start to get frustrated and I start to revenge trade. I start trying to beat my money back out of the market. And I said, well, let's start by just focusing on your data. If we extrapolate the numbers, if your win rate is truly 50%, did you know that over the next 500 trades, statistically, you are likely to encounter a maximum of around 9 losing trades in a row? And this is not by human error. This is not by being flawed with your means of execution. This is you doing everything absolutely perfectly, but because we are playing in a probabilistic environment, you are going to encounter 9 losers in a row. That's what your data is telling you. The problem is your psychology and your expectations are not aligned with this, because what you're telling me is you've got 2 or 3 losers in a row and you're getting frustrated. But your data is telling you that you could potentially expect 9 losers in a row over the next 500 trades, but you haven't accepted that. So the issue is nothing to do with the markets. The issue is probably nothing to do with your ability. The thing that you have to focus on fixing first is truly understanding your data, understanding, is your win rate actually correct, and then understanding what that means and how it translates to your expected performance in the market. I promise you, if you take that idea seriously, if you truly take the time to collect data, to understand it, to build it in a way that gives you meaningful expectations for what is likely to occur, you can probably fix 70 to 80% of your issues in the market, your psychological challenges in the market. Because most of the problems that I deal with, and again, I say this from 5 years in this game of pretty much talking to or connecting with hundreds, possibly thousands of traders over that time, right? Most people's issue comes from flawed expectations before they even hit the button. And the expectations are not correct because they are not based on ample data that gives you an idea of what to expect, right? And I'm not saying this is the only way to go about it, but in terms of a systematic approach to actually overcome your challenges, this is probably the most straightforward path to do so. And the problem is, it's the part that most people neglect. Now, you guys here specifically, you have one of the biggest benefits, which is you have the Darwinex platform. You have all of the metrics, the data points that they provide over time to help you to understand, create the right expectations, and optimize your edge over time. So if you are someone that is actively using and trading this platform, but you're not taking the time to sit down and reflect over your performance over a large sample size, a monthly, 3 months, 6 months, 12 months, and understand what your data is actually telling you, you're going to be doing yourself a disservice, right? Understanding and analyzing your data is going to create all the right mental shifts that you need to find most of the breakthroughs that you need going forward. Okay? A couple of other things that I want to mention. One of the other psychological reasons that we start to struggle with accepting this idea of uncertainty is because, as I mentioned in the previous section, we talked about this idea that the mind experiences this fear of the unknown, right? We don't like it when we don't really know what's going to occur next. Now, what I like to say to people is when most people have this pre-instilled fear inside of them that they don't really know what's going to happen next, it's often because psychologically they're focusing on the right thing, right? Most people get into this game with this flawed idea that their job is to predict what happens next in the market. And don't get me wrong, you have to make a few, I guess, predictions, you could call them, if you ever want to be able to make any money, and they have to turn out correct. But I like to think of this game as this is not really about predicting. This is not about developing this crystal ball that can tell you what happens tomorrow, next week, and next month. I truly believe that the key to finding success in this game is accepting that actually you're never always going to be able to predict what happens next. And actually the only thing you can do is focus on how you manage risk. The problem is most traders don't think this way. Most traders put the emphasis on the predictive side. And if you are trying to control something which you have absolutely no control over, if you're trying to be right in a situation where the outcome is always uncertain, that's a prime example of why you're going to experience some kind of stress, frustration, or anger. You're just setting yourself up for failure because you had completely the wrong belief system going in. So I think that most traders would be better off accepting the idea that as a trader, you never really know the outcome of any trade because you don't have control, right? You have to accept that there is an uncertain nature of the market. And the reality is, if you can't ever guarantee the outcome of your next trade, then your job isn't to predict what price is going to do next. Your job is to place almost bets with this idea of asymmetric risk to reward. For a lot of people, that will become your edge. This idea that I'm going to cut losses after a certain degree and I'm going to hold winners to a certain degree, right? Whether you're working with a risk to reward of 1-to-1, 1-to-2, whatever it is going forward, your job is to manage risk in a way that gives you an edge over time. If you can do that, you have a good chance, at least from a psychological perspective, of actually putting yourself in a position where you start to make money, right? So understand that your edge in the market, yes, of course, it relies on having a specific set of data that tells you when X, Y, and Z criteria happens, you are likely to be in a position where you can make money. But really, from the perspective of what you can control, your edge is not in your ability to predict, it's in your ability to manage risk. And that's a very, very powerful mindset shift that I think if you guys took seriously, it would be very, very beneficial, right? Last couple of things that I want to cover with you guys today, very, very briefly, is I want you to create a perspective shift. Something that we talked about right at the very beginning is most traders instinctively reject this idea of uncertainty because they immediately presume that nothing works, right? That idea of the unknown is scary, the mind rejects it, it pushes it away. I want you to think differently about this, right? I want you to start thinking about the idea that uncertainty could actually be a means for fantastic opportunity, right? If you are on board with our last point and this idea of your job is simply to manage risk, you are now playing in a game where to some degree, you can almost guarantee your downside. Again, open to the idea that slippage is a very, very real thing. But you can almost guarantee the downside, but depending on your strategy, your upside could potentially be infinite. And I'm not telling you guys to remove your take profits and hope that everything goes to the moon here on out. But I'm simply saying that if you open your mind to thinking in that way, uncertainty can actually be a good thing when you can cap your downside. When your downside can always be controlled, when managing your losses can be controlled, then actually, if you truly have an edge in the market over a large sample size, by simply managing risk, you're going to give yourself the best odds of allowing that edge to actually play out over time. Okay? The last thing I want to leave you guys with today, and this is going to be something practical that I want you to take away and start to actively think about off the back of this. This goes in line with obviously the topic of today, which is discussing how to accept uncertainty. One thing that I find not a lot of traders actually make a plan for is what happens when everything goes wrong? What happens when you put yourself in a position whereby you've done everything right, you've analyzed correctly, you've managed risk in the right way, but what happens when the market doesn't agree? What happens when probability is not in your favor? What happens if World War III breaks out and negates all of your carefully done analysis? What happens in those situations? I want you to be prepared for the idea of have an idea of how you want to manage your emotions, right? How would you like to react when you feel like overtrading? How would you like to react when you feel like revenge trading? How would you like to react when you're bored or you want to FOMO into the market? In an ideal world, actually stop and write down, how would I like to react in that situation? The second important thing I want you to add to this, when you go from perfectly cool, calm, and collected to absolutely trading like a gambler on tilt, what was the trigger point? What got you from cool, calm, and collected to degenerate gambler? What was the crossover line for that? Because there was going to be something that was a tipping point for you. For some people, they can accept a loss, they can accept a couple of losses, but the moment they have 3 or more losses, it crosses a certain threshold for them, and that puts them in a state of tilt. What is that tipping point for you? For some of you, it's going to be boredom. For some of you, it's just going to be incorrect expectations, not accepting that you're going to take a loss. For some of you, you're going to be risking an amount of money that you're not truly comfortable with, and so you're always going to be screwed when you take a loss, right? There are going to be a variety of different triggers that are going to cause some of your bad habits of behavior. If you can define and be very, very specific about what that trigger is, and then have at least a plan written down as to how you would like to react to that, what we're going to be focusing on over the coming few weeks as we start diving into very, very specific topics is how to actually connect the dots. Because these are two things that ideally need to be defined before we have those conversations. I'm going to help you connect the dots and bring those things together. But understanding what the trigger was is something that has to be identified ideally in the journals that we talked about the importance of a couple of weeks ago in our last session. Having that plan of action of what you would like to do in an ideal scenario is going to help to map out strategically, this is what I should be doing in that situation. And all I'm going to be doing in the middle is giving you some fine-tuning tweaks in order to tweak the psychology, tweak the perspective to ensure that you're able to flip the script mentally, to be aware of the trigger, change the perspective, and then be able to follow through with your plan over time. And that is what a strategic reframe actually looks like over the long run. I'm not promising overnight results. I'm not promising overnight success because I don't believe they really exist. But I promise if you stick with this idea, I will lay out a framework for you guys that will allow you to break free of those patterns of behavior. But it all starts with better understanding yourself and starting to look beneath the system to truly understand why those bad habits, why those thoughts, why those emotions actually exist in the first place. Okay, that is a wrap for today's session. I'm going to leave maybe 60 seconds ago, specifically for the guys in Discord. If you're watching this on any other platform and you would like to get interactive with these, please make sure you're part of the Darwinex Discord as well. If you guys do have any questions based on the topic, the nature of today, or if you have any other topics, challenges, hurdles, things that you're struggling with in terms of your psychology or your performance, please feel free to drop them in the chat. I'll stay on the line for about 60 seconds or so. If there are no questions, I will leave you to enjoy the rest of your day. Okay, I haven't seen anyone typing or anything at this moment, so I'm going to presume everything is good. As I mentioned, going forward in our next few sessions, we're going to start getting very, very specific, diving deep into specific topics and challenges that your interests, that you're going to be experiencing. If you guys do have any recommendations, if you have ideas, I'll maybe talk to Kieran to see if we can get maybe a poll running to see if there are specific topics that you guys would like me to focus on. If you do have some recommendations or things that you would like to hear me talk on, be sure to drop them as a comment inside the Discord. I will start keeping an eye on that, and we can start framing these sessions specifically around the things that you guys would like to hear. For the meantime, I hope you guys have a very successful trading week ahead, and I look forward to speaking to you again in a couple of weeks. Thank you guys so much. Take care.